Testing. Huh. Am I? Okay. I hope this is working. Can you guys hear me? I'm not sure if the audio is working or not. You can hear me? Okay. Okay, pardon the technical difficulties here. Good afternoon, everybody. Aaron Yoon coming at you from New York City again. Today is Tuesday, which means we are going to be talking about tools and tactics. And I have a big update for you today. So, the stock market has crashed, and you're probably thinking, oh my God, this is an opportunity. You know, it's on its recovery, but what should I buy? Which stocks do I buy? Stocks should I buy? And so you've probably done some Googling, and you've asked some friends, you've asked some families, you might have even consulted some gurus out there. I'm using the air quotes on purpose because a lot of them are actually what I like to call furus, fake gurus. So many of those on the internet. And so you might be kind of confused and stuck in like an analysis paralysis type of situation right now, and confused as to what stocks to buy. You know, it's not like you have an infinite supply of money, so you gotta be selective. Well, today I have great news for you guys. You don't have to think about that anymore because I'm about to show you a free tool that is going to do all of that for you and take care of the decision making so you don't have to do it. Okay, so let's get right into it and go right. So let's go to the screen here and let's just get right into it. Let me share my screen. All right, so you should see my phone background, my awesome Superman wallpaper, and obviously we're going to be going to our go-to app, what I consider to be the absolute best stock investing app for beginners. If you're an advanced trader, you might be able to do something cool and fancy with extra bells and whistles. But if you're a beginner, this is by far where you want to be starting. And if you've been following me for any amount of time, you know that I've been raving about this app ever since it came out in January, and we've spent a lot of time talking about this right here. If you look at, I think you can, yeah, you can see my cursor. So we've been spending a lot of time talking about the Spy Plus portfolio, which I'm just gonna load up real quick here, because it's been kicking ass. Pardon my language, but it's warranted. It is positive 13% for the year. Last I checked, the S&P 500 is still negative. Because it had such a nasty, nasty crash. This app was able to dodge it completely, and is just pure gains right? There's a little bit of a little bit of a dip here, right? This was a little bit troublesome, but look at how it recovered afterwards, right? It's beautiful, absolutely beautiful. But today is not about the Spy Plus app. It's about its baby brother or baby sister, I should say, the Spy I portfolio. And until recently, I've been very critical of this particular portfolio because I invested money into it the day it came out, and I put in 150 bucks just to take it out for a test drive. I wasn't very confident into the stocks that it had inside of it. So let's open it because now my mind is completely changed, and I'll show you why. Before I share with you why my mind is completely changed, now I'm a huge fan. Let's take a look at the history and why I was so critical of it in the very beginning. If you look at, so this is long history here, but if you look all the way back to March 9th, I put in 150 bucks because that was the minimum amount of money that you would need in order to invest in this particular portfolio. And I'm not able to show you everything that the portfolio had, but these are some of the things that it bought at that time. Okay, it bought CNTY, which, if you're not familiar, it is a casino stock. I mean, seriously, casino stock right now? No one's allowed to go to any casinos, so this one lost money. Nokia, which was, I didn't really understand why Nokia was in the picture. And then it also bought MFA, which is a finance company. So that one I understood why. And CLOU was like a cloud computing services company, which the tech, I understand why you would want that. But none of these stocks really performed well. And then of course we have the SPY G, which is just a very cheap way of tracking the S&P 500. So that one was okay too. But overall, I wasn't very confident in the quality of the stocks. And as much as I love the Spy Plus, I love that this is an AI driven app that is gonna help you make, well, not gonna help you, it's gonna actually make decisions for you so that you don't have to get stuck in analysis paralysis and start smoking the hopium. I wasn't that confident in the kinds of stocks that it was holding before, so I only put in the minimum amount, and just to show you guys what's gonna happen with it. And if you recall some of my previous videos, my performance for this was pretty atrocious, and I'll show you that in a second. But since then, the entire portfolio has kind of changed. You can see here that it sold all that other stuff all by itself, right? And it couldn't have sold it soon enough. I feel like it was a little bit late, but better late than never, right? Most people never sell, and they're spending the vast majority, many years trying to recover because they didn't have the foresight or the courage even to sell and minimize and cut their losses. That's actually, here's a bonus tip for you guys. That's actually the number one reason that most people don't achieve their financial goals. The number one reason most people don't achieve their financial goals is because they don't cut their losses, right? And losing is much stronger than winning. So the majority of investors, the buy and hold index fund, mutual fund types of investors, spend the vast majority of their time recovering from crashes. So like a crash would last 1 year, and they spend the next 4 years, for example, just trying to break even. So I mean, if that tells you anything, knowing when to get out of the market is a critical skill, but most people just it's a very difficult skill to master, which is why you should have someone else or a AI do it for you. And this one did it a little bit late, but still good enough. Here, let me get back to the screen here. So here we have Um, it sold off everything like Nokia, MFA, CLOU, CNTY. This crappy casino stock I was very unhappy with. If you look, let's just go through it one by one, okay? Let's just see how bad that it did, right? Because I'm not I'm nothing if not impartial, right? I'm gonna call it like I see it. Um, so CNTY, look at this. It bought it at 22 and sold it for 12. it, I lost like 40% on that one stock. Fortunately, let's see how many shares I had in there. Fortunately, I think I had 4 shares. So I lost like $10 times 4. Like I lost $40 on that one share. I think that's where I lost the majority of my money actually because come on, casino stock again. That was just a bad idea. Okay. So next, we had Nokia, bought at 20, sold at 19. Okay, minimal loss there. MFA, I bought it at 21. Wow, this one was awful. Sold it at 6. Jeez, what happened there? 3 shares of that. Lost, what is that? I lost like $15 times 3, which is like $45. That was an atrocious performance right there. But again, I only had $150 in this particular portfolio, and it was just to take it out for a test drive. I didn't really care that much. It was more of an experiment to take it out for a test drive so that I could take the risk and make these videos for you guys, and you wouldn't have to. So you would know, stick with the SPY Plus, right? But now I have completely changed my mind because look at the stocks that it's been look at what it's bought recently in the past week. Okay, let's just look at the past week. Okay, so it added seemed to have had a little bit of a technical difficulty. Not sure what this is, where the purchases got canceled, but it did buy Carnival Cruise Lines, right? Which there's been a lot of talk about Carnival Cruise Lines. Now you might be thinking, oh my God, isn't Carnival Cruise Lines also a bad pick? No one's going on cruises anytime soon, given the situation of the world right now. But the idea here is that Carnival Cruise Lines has already dropped, and it was at a bargain price, right? And anytime something's at a bargain price, I mean, this is just what Warren Buffett talks about all the time. He's a value investor. If you can buy something at a freaking steal, then you go for it, and that's what the app has done here. The difference between this and the casino stock is it bought it high. It bought it at 22 and sold it at 12. That was silly. That was buying high and selling low. But then again, this is an unprecedented situation that we're living in right now. So many things that we've never seen before have happened in the past 2 months. So I'm gonna cut the AI a little bit of slack and give it. It needed some time to acclimate to this completely unprecedented situation. So it got rid of all that stuff, and let's take a look at what it's buying now. BAC is a Bank of America, if I'm not mistaken. XOM is Exxon Mobil. These are all really good buys because they pay good dividends, right? I've been eyeing Bank of America and Exxon myself, so I guess I'm a little bit biased. I do have a little bit of a confirmation bias that like stocks that I was eyeballing because of the dividend payment happened to be picked up by the same by this AI. I don't know if it's kind of like reading my mind or what. It's kind of spooky actually. But Bank of America and XOM have been on my, I can even prove it to you, have been on my radar even before this AI picked it up. And of course you have the SPY-G and Chef, the CHEF is pretty cool as well. I looked it up. It is a food services, like a food provider stock. And I'm like, okay. I mean, I think we're gonna need to see more and more of that going up. So I never heard of it before, but I'm pretty confident in that purchase. Um, but just because of the sector that it's in. So it's holding. Oh, and lastly, I think I skipped over this, but it's also holding AT&T, which is also known for its dividend payments. So it's very dividend heavy, and I really like that. And you can see that these yellow dots are indicating that it's holding all six. And just in case you're wondering, I do have the upgraded version of this as well for my retirement accounts. And in that version, I get to see what kind of algorithms is being utilized for SPY Eye. What kind of algorithm and strategy is the AI using to hold these six positions? And it's very similar to just, unless something crazy happens, it's just gonna buy and hold. It's about as close as you can get with a to a buy and hold situation. So what we're really going for here, um, what we're really going for here is a hold on to it for a year, two, maybe like I don't know, however many years, and just collect dividends because that's way more stable and there's way more certainty in collecting dividends than than the actual performance of the stock itself. So this is pretty cool actually. So let's just go through each of these. I'm gonna go with my favorite one, which is Exxon. Let's let this load up. Okay, it took a little while there, but all right. So it only bought one share, because I only have like 150 or like 250 bucks in this or something like that, um, at this point. So it could only afford one share, and let's look at the performance of it, and over the past, let's say, oh yeah, let's look at it over the past year. So right up here we have January, and then down here's the downfall. Right, it looks really nasty. And I mean, how awesome would it have been to buy this stock at 31? You know, that would have been really awesome. But no, no one's perfect. Even this AI can't time the market perfectly. I think I actually bought this manually on my own, a little bit at a better price than what this one got it at 40. But the real benefit here is this number right here. The dividend yield is 8%. Okay, so if you're not familiar with what that means that right now, since I have one share, this is going to be easy math. So right now, by holding this, I am going to get 8% of this amount, whatever the value is, per year. And it's paid out, I think, every quarter. So it's like 2% per quarter, right? Eight divided by 4. And it's just really that simple. Now, um, if the value of this goes up, then so does my dividend payment. Um, and if I have more shares of it, then multiply my payment per share times however many shares I have. And so right now I plan on putting like dumping a lot more money into this, what I consider to be more of a dividend oriented portfolio. It's not, you don't see that labeled anywhere, but based on what I can see, the SPY Eye has algorithmically transformed itself from just picking like oddly risky stocks, and it kind of transformed itself into a more dividend oriented portfolio. So I'm sure some of like the dev guys or like the investment brains, the CIO of the company or somebody decided, well, okay, let's change the parameters of this kind of SPY Eye, because it's not doing, like, now is not the time to be investing in. I think like one of the ETFs or one of the equities that it had was like Bitcoin. And we just talked about one of the stocks that it was holding was like a casino stock. Now's not the time to be holding a casino stock, you know. So it transformed itself into a dividend oriented type of portfolio, and right now I think that's a really good move. Um, and not gonna lie, I might be a little bit biased that it picked two stocks that I was eyeballing already, so it made me feel it made me feel good about myself. And also picked up Carnival Cruise Lines, which I was like kind of more iffy about. I was open to it because it was so cheap. Let's look at that real quick. It's so cheap. I have 4 shares. Um, it dropped all the way down. Like at its in January, it was trading at like 50, and then it dropped all the way down to like, I bet it was less than 10 at one point. Hold on, let me scroll over and scroll over like this. At one point, it was less than. Yeah, see, at one point it was like at at like $8, like just under $8. Now, how awesome would it have been to buy it at $8 and then, hopefully hold it until it goes back up to 50 after a few years? That'd be great. However, buying it at what did I buy? What did this app buy it at? Oh, it bought it twice. It bought it on April 3rd, 2 shares at April 3rd. Oh, it did buy it at $8. That's awesome. Only 2 shares, so it's like whatever. Um, and then I guess it bought two more on April 13th at 11. Okay, so I think this is what happened. I put in some um, when I saw that the stock picks had changed and shifted, I felt a lot more confident about it, so I put more money in it, um, just to get familiar with how to, contribute more into an account. It's just I threw another $100 in there, and it must have bought two more shares all by itself. Like, I'm not doing any decision making here. This is all completely algorithmically managed. So that's a pleasant surprise. I'm glad I caught a couple of shares at least at $8. Again, like, I'm not gonna get rich off of throwing a couple of $100 in here, right? But the point is to show you. Imagine it's not a couple hundred, but it's a couple thousand or tens of thousands. Like, imagine being able to make the decisions based on this app, in your retirement account or in your other trading platform. This can be an incredible tool, right? And if you've been on the fence about certain stocks, well, I mean, you have a professionally managed hedge fund manager decision making platform at your fingertips for free. So there's really no reason to ignore it. I would say throw $150 in there and let it do its thing and make your decisions based in your bigger account where you have a lot more money. Make your decisions based on what you guys see here, or just do what I do and just upgrade and let them do it all for you, so that it's completely set it and forget it, 100% automated, and I don't have to worry about it. My retirement accounts that are in the upgraded version have also been, they're all positive, right? I don't know anyone's retirement accounts, even with this bounce back that the market has had the past few weeks. I don't know anybody's retirement account that's actually performing positive, double figures positive for the year. And as we saw, my portfolio is up 13% for the year. So I mean, this is kind of a no-brainer if you ask me. Let's look at some of the other ones. So Chef, CHEF, is the Chef's Warehouse stock. Never heard of it before myself, to be quite honest with you. But you can see that it did drop like crazy, and now it is trading at, wow, like $3 a share at its bottom, and now it's closer to like 10 and whatever. Okay. Um, so it is a bargain, and this one doesn't pay any dividends. You can see that this one is not paying any dividends, but it's just that it's food. I mean, come on, like for for the foreseeable future, food distribution is going to be critical. It's critical now, and it's only going to get even more and more important as time goes on. So I guess based on the sector and the industry that it's in, and based on the performance of it, the the AI decided this was a good one to pick for the like the food services, or the just the food industry. I don't even really know how to talk about it. That's not really been my thing. I'm more of a tech guy. Um, but I mean, I think it's just picking up a stock in a different industry to diversify itself, and it's a really really good deal. At its high, it was trading at what, like it was trading near $40, and we're buying it for, like, even if you bought it today, you'd be buying it for like 12, which is like 70% off. When you buy something, when you're investing in food at 70% off, I mean, I feel like that's a pretty good deal. You know, even though I've never heard of the stock before, based on technicals and knowing what industry it's in, it is. I'm very very confident in this pick. And here's the thing, like, if I like, this is a really good education tool as well. Like, I learned something. I learned about Chef's Warehouse. I hadn't heard of that before. I'm not really big on as a stock trader. I'm not really big on individual equities, because there's just so many stocks. It gets a little bit overwhelming. When I learned to trade, I liked to trade currencies and some futures contracts that have high liquidity, so I wouldn't really run into any kind of surprises there or anything like that. And those are better for like an income type of trading. But for long-term investing, I've always just left it to like the AI, because I just want to leave. I don't want to think about it, right? Day trading and swing trading is hard enough. When it comes to my retirement investing, I just let this AI take care of it. But this app has taught me something. Like, okay, this is cool. I didn't know that this had a. I didn't know that this had. Um, this was this was keeping an eye on a, stock in the food industry. So that's pretty cool. Moving right along, we have that. I'm not going to spend any time on the SPY G, because that's just the S&P 500. That's just bread and butter. I feel like if you're not a high level sophisticated investor, you want something that tracks the S&P in your portfolio. It would be kind of silly not to, because considering the S&P is largely considered like the score to beat, it'd be silly not to have it as a big part of your portfolio. You can see that here it's like 16% in 6 stocks. So it's like I'm like 96% invested of all of my cash, and I'm 96% invested. 4% of my money is not being invested at all, right? So that's how it kind of breaks down. It's pretty even throughout. Let's look at Bank of America. Let's let that load. I only have one share of Bank of America, and let's look at the performance here. I know off the bat that this is more of a dividend play, but let's just look at the performance and the value and the price action of the stock. So at its high, we're looking at something like 35. It was trading at $35 back in January, December, and then you see the huge drawdown at its low. The lowest it went down was to 18. Okay, it almost dropped in half, And since then, it's recovered pretty nicely, right? It's recovered about half of what it lost. Maybe a little bit less than half of what it's lost, which is kind of where the market is right now. The market kind of recouped half of what it's lost. And of course, really, the big thing here is the dividend play. This one gives a dividend of 3%, which is, I mean, for a bank, it's all right. It's pretty solid. Bank of America isn't really going anywhere, right? I think we can all agree with that. And so this is a pretty safe play. I have one share in this. Again, don't really pay attention so much with the shares. This isn't something that's going to make me rich. This is just to test drive this free algorithmic portfolio so that I can take on the risk and see what it's doing and give you guys feedback on what I think, right? And so I think that now, if you have this app, well, if you don't already have this app, you got to get it. It's free. What do you have to lose? And none of the other apps are going to be timing the market for you and picking the stocks for you. You're on your own to make your own decisions with every single other app out there. I challenge anybody, drop it in the comments below, if anybody else has an app that makes buying and selling decisions for them so they don't have to worry about it. I don't think that there's any other app out there that can do that. I'd love to know if there is, so drop a comment below if you know of one. Free or paid doesn't matter. I just like to know is there an app out there that's going to make buying and selling decisions for you and you don't have to touch anything. I've never seen it. Anyway, so at this point, I think that it's fair to say I am very, very confident in this portfolio now, and so I'm going to be putting more money into it. And so make sure at this point, like if you haven't already done so, make sure to subscribe, make sure to follow me, and hit the notification bell so that you get constant updates. I'm going to be, like, pretty much every week, I'm going to be giving you an update on how this app is performing for me. And you can join in and then ride the wave with me, or just watch it for pure entertainment. It's totally up to you. But either way, I'm going to be putting more money into this very, very soon. You know what? Let's do that right now, actually. I'll do that towards the end of the video. Actually, yeah, let's just do that right now. So from here, just in case any of you guys that have the app, you want to follow along, from here, let's say you at this point, let's say you want to add money to a portfolio or to buy another stock. Let's go to banking here. And you would hit transfer to iFlip. And I'll use my newly added Varo account. And I'll throw in $100. Hit review. And it does say it's going to take 2 to 3 business days for this to take effect. Normal. Hit the check. Let it load. It doesn't actually give any kind of confirmation at this screen right now, but if we go to history, you will see in pending history that I've just thrown in a bank deposit of $100. Once it clears, it'll be down here in the cleared history. So let's go back. And now I'm going to add funds to the SpyEye portfolio from money that I already have. So if you go to the settings over here, I already have about $764 or just under $765 of buying power, which means that I could buy $764.95 worth of stock wherever I want, or I can put it into one of the algorithmically managed portfolios. Now, because the SPY I portfolio is way cheaper than the SPY Plus. The SPY Plus, you're going to need hundreds of dollars at a time for it to actually be able to buy the shares, because it's trading Apple and the Spider, which is like hundreds of dollars per share. So throwing $20, $30 in there isn't going to do anything. But if I were to throw $100 into the SPY I, the AI will figure out, hey, you know, what's a good stock to buy? Like Carnival, for example, we saw was like trading at 10 or 12 bucks. So let's go in here. Let's go to stocks on the bottom right. Let's go to the SPY I portfolio. Okay, let it load and then hit trade. And you'll see a couple of buttons pop up. Now, if I hit, yeah, so you see a couple of buttons pop up. You want to hit the plus button, and you want to enter the amount of money that you want to add. Now, just to be clear, if this is your first deposit into SPY I, you are going to have to put in a minimum of 150 bucks. But I've already put in like $250 in there already, and I'm just adding to it. So for me, that limitation doesn't apply. Okay, just want to be clear that I am not. This is not going to work for you if this is your first deposit. Okay, so for me, I'm just going to throw in another 100 bucks in there. Hit done. Hit review. And I'm going to swipe up to confirm. Okay, and so now you see here that my new invested amount into this portfolio is $331. So just in case you're wondering, the reason this is $331, when my total investment actually would have been $350, I put in $150 in the very beginning, and as we just finished talking about, the stock selection that it had at that time was not so good. So I lost a ton of money. So I went from like 150 down to like 99 or something like that. I lost like 1/3. It was not good. And if you watch my videos back at that time, I warned everybody, if you're going to get this app, it's great, but stay away from this particular portfolio. Stay away from the SPY I. It is not handling this whole coronavirus pandemic situation very well, right? It had casino stocks in it. Bad idea. And it was just not performing very well. But since then, the AI got rid of all of those stocks and switched it to more of a dividend holding kind of portfolio, which that inspires much more confidence in me. And it even picked up some stocks that I had my eye on anyway. So my confidence went up. So I threw in another 100 bucks in there, and then now I'm throwing a third round of money, throwing another 100 bucks in there. So my total invested amount was actually 350 total, but because I had lost so much back when the stock selection was kind of poor, I am still down on this portfolio. If we wanted to take a look at the performance of it overall, I can show you that in another video maybe, but that's just what this is. It's just a cumulative amount of your net asset value, right? Just I wanted to be very clear about that. It's not the amount of money that you put in total, it's what the amount of invested value that your money is in total. Okay, okay, now we can hit the X and get out. and I'll show you the performance of this and how I'm technically down on this SPY eye portfolio overall. Okay, so let's just go back. Let's go back. I guess like just the 1 month. No, I guess we'll go back 3 months. I started investing. So you can see that my starting investment amount was 250 back in March 5th. And as I just got done saying, back then the selection of stocks was pretty atrocious. Like I didn't really have much confidence in it when I bought into it. But I just wanted to take the app for a test drive, and I want to see what the algorithms would do. And so I figured, like, hey, whatever, it's not a big deal. I'll risk 150 bucks. And long term, I feel like it'll know what it's doing, and I'll take that risk so that you guys don't have to, right? So I looked at this, and look at my performance, man. It looks like this from here to right here. I basically absorbed the damage of the stock market crash in full. Look at, like, this is, I went from 250 down to 209. Okay, and it was like, okay, it wasn't that bad. It was down 16%, whereas most people were at its very bottom. The stock market was down like 30%. So I guess it's not that bad, but it and it definitely felt like, oh my god, this is horrible. Why did I do this to myself? So I lost a ton of money. I lost like $41. If you look right here, you'll see that I lost $41. uh, Not very good. But since then, it started to recover, and I don't know when it changed, because it kind of caught me by surprise. But if we go to the history here, we can see, yeah, like, I guess in April. Maybe the AI updates itself every month. I don't know. Uh, for me personally, it was a little bit late, but better late than never. Because most investors, they never change, even when they should. So this AI definitely adjusted itself very, very well. And starting in April, it started to buy things that actually made sense, that I was actually paying dividends and stuff. So since April, it's been buying up Carnival, AT&T. It sold the crap that it had before, Nokia, and all this other stuff. These were mostly losses, so ignore that. And then it was buying up Bank of America, Carnival again, and ExxonMobil, which was great. I love the dividends on that. The Spider, and Chef, right, which is Chef's Warehouse. Oh, and you can see up here in the pending history, you can see my pending deposit of $100. So I should see that, hopefully, right now it's, the market's closed right now, but hopefully tomorrow it will pick up another one of these, several more of these stocks. I'm not sure it's gonna allocate that $100 on its own, and I'm curious to see how the dominoes fall. So my performance on the year is, no, this is one day. My performance on the year is actually uh total down 7%. Now, if you guys are just getting into this, um, now negative 7.6% is still better, I think, than the S&P as of today, which is still down, I think, like 12 or 13% even after the gains today. So technically, I'm still beating the market, even with this atrocious performance. But hey, what I've learned is that the S&P is not that hard to beat if you just know how to dodge bullets. And this AI does a fantastic job of dodging those bullets automatically, so I don't have to. So, I mean, I feel like I'm taking credit for something that AI is doing, but hey, it's my money. I can take credit for it if I want. so, so yeah, my overall percentage for the year is negative 7.6%. But if you guys are jumping into this now, um, you'll find that like there's I feel I'm not gonna promise anything. I'm not gonna guarantee anything. I'm not allowed to do anything like that. But you saw what the stocks that it has holding, right? They're so close to the bottoms within the past year's performance or so. I feel like there's a much better chance of these stocks going up than going down further. And if they do start going down further, the AI is going to cut it, right? It's going to get rid of it. Now, while you're doing that, kind of like a hedge against that bet is the fact that the Spider, the Bank of America, and ExxonMobil, they're going to be paying you dividends. So the dividends are kind of slow. Yeah, I know. They're every quarter or so. But better than nothing, right? And it's going to help you out, right? It's going to help cushion the blow. Now, I know what you're thinking. How does the AI know the projection of these stocks? Because one of the things that I've seen recently is that some stocks don't look like they're ever going to recover from this pending recession and economic collapse. Some cruise lines, it's like really up in the air. So how does it know that Carnival Cruise Lines is going to be the one to survive? Well, it doesn't. The AI isn't like the predictive software that we see in like Westworld. I don't know if you guys watch that show, but in that show, there's like a robot that can predict with incredible accuracy, like people's like fates and stuff. This is not that kind of AI, right? This is not that at all. It is purely reacting to the price. And right now, Carnival Cruise Lines is at a price that it's like too good to not take a shot. That's what the AI is determining. Now, if Carnival Cruise Lines next week declares bankruptcy and the stock starts dipping down and approaching zero, the AI is going to cut it for you. Now, imagine if you had to make that decision manually. Imagine if you had to keep up with the news or like somebody, there's like a rumor of Carnival going bankrupt. How would you react? Would you hold it? Would you sell it? How would you know? Now you have this incredibly burdensome decision to make about whether to hold it or whether to keep it. Well, the whole point of this AI and the whole point of my channel really is to alleviate the emotional burden and the fear of actually investing in the market, which is why this is absolutely the best app. If you're a beginner, you need this app. Just to understand how a professional makes decisions, you can just watch it and be like, oh wow, it got in at this price and it got out at that price. It didn't really get emotional about it or do anything, do half the things that humans do. It just did the math. And that level of decision making that is done on your behalf for free is something that is completely invaluable. You can't ignore it. If you are a sophisticated investor or you trade yourself, you can use this as like an edge to give you a hint. And as a trader myself, like there is such a thing as too much information, right? Where you get overloaded and you're like you get stuck in analysis paralysis. That totally happens, and then you start going backwards and making emotional decisions. I think I did that earlier today, and I had to cut my losses and then kick myself and regret it later. Right? It happens all the time. It happens to the best of us. We're just human. So that's why it's really useful to have something like this that has no emotions whatsoever. It's just pure math. Help with your investing and help with your trading. You can let it do all the work for you, or you can let it do some of the work for you and still trade manually yourself. Because hey, I'll tell you what, I can still trade. Whoops. So I can absolutely trade manually on this as well. So we open up the app and let's take a look at trading manually, right? So I hit the stocks on the bottom right. And let it load. You'll see that it does give a list of big movers if you want to, jump on the bandwagon with those, or popular stocks if you want to jump on with some of those. Um, let's say, for example, you wanted to buy. Let's say, for example, you wanted to buy Wells Fargo, which is something I already have. That's actually a bad example because I already have it. Okay, so let's say you wanted to buy Carnival Cruise Line, right? This is something that's already in the SPY I portfolio, but you'll see that currently it shows 0 shares because I am not in the SPY I portfolio right now. This is the manual trading section of the app. So if I wanted to, I'll just buy one of. I'll just buy a share just to show you. I hit buy. I'll hit the number of shares. Let's say I just want one. If you want 10, you would see that this very light gray font here shows the amount of money that you would need to buy 10. If I wanted to buy 100 shares, I would need $1,251. Hopefully you guys can see that. I only have $664 of buying power though, so there's no way this would work. And if I were to try and do it, it would actually give me the error insufficient funds. Okay, so make sure that you do your own math and make sure you have the appropriate number of shares involved. Let's say I just want to have just one share. This is just for an example. So let's say I would hit review, and then I would swipe up to confirm. Simple as that. Now, because the market is closed right now it's about 6:30. You're gonna get this. You're gonna get this message right here, where it says this order is an after hours order and will be executed on the market open. So this is going to execute on whatever price it's at tomorrow at 9:30. Now, if for some reason overnight the stock, let's say like it jumps up like crazy to like $20, it's not going to actually buy the stock at that price because it's too far away from what you think you're buying it at. I think I'm buying it. I'm saying, hey, I want to buy it at 12.51. I don't want to buy it at 20. That doesn't sound like a good deal. So if it's within reason, and I don't really know how to quantify within reason, but if it jumps too high, or too low, I don't think you'd complain. But if it jumps too much from this price right here, it's gonna cancel the order. So keep an eye on your email because it will notify you via email, and so that's the only caveat to that. Otherwise, I'm just gonna hit the X here. Let it load back. And that's how you would purchase a stock. And that's how you would purchase a stock manually. So you can see that my buying power has just decreased because it's reserving a certain amount of my cash for that particular stock that I wanted to buy, that one share of Carnival that I wanted to buy. So that about wraps up today's video on the SPY portfolio. I showed you some bonus features as well. If you have a few $100 to get started, you're just starting out as a beginning stock investor, this is the best place to do it. This is a place where you can earn while you learn buying and selling decision making. I haven't seen anything quite like it. This is absolutely the best app. I recommend it to everybody of all levels because it's very, very flexible in terms of how much money you can start with as little as $150, and it can trade up to, I don't even know what the limit is, if there is one. But I don't want to I don't want to test it out, but it can trade up to thousands and thousands of dollars. You can see that I already have myself around $2,500 into this app myself. So I will keep you guys updated as to what happens with my performance in. I have money in the SPY Plus. I have money in the SPY I, and I'm looking forward to how that performs. It was a very pleasant surprise to see that it modified itself all automatically. And you can see that I'm also holding Wells Fargo, some Exxon, and Disney myself. These are just stocks that I bought manually. So I'm doing all three, right? Both algorithmic portfolios and trading manually. And I'll keep you guys updated as to how I'm doing and how it goes pretty much every week. So if you're here, make sure you hit subscribe, make sure you follow, make sure you hit the notification bells, and I'll see you guys next time. Thanks.